Weakness continues for the markets. So during weak times, what you do is listen to the long-term views as well as some expert opinion. Chetan Ahya of Morgan Stanley expects a slowdown in the US growth story in 2019. In an exclusive conversation with us earlier, he spoke about a whole host of issues relating to the growth trajectory of emerging economies, the fiscal positioning, and the MPC framework in India. Here's a few snippets of that conversation.
We are expecting the U.S. growth to slow meaningfully to 2.3% average in 2019 from the current run rate for the fourth quarter. It looks like it's tracking at around 3.6. So we are seeing a meaningful slowdown in the U.S. in 2019, and therefore we do expect the Fed to pause around the middle of this year. When we look at the EM aggregates, EMX China is actually showing some improvement in the last 2-3 months, particularly Brazil, India, and some of the other smaller EMs like Turkey and Argentina, which were earlier going through a lot of problem, are beginning to see some respite. And so EMX China as a group, which is roughly about 27% or 25% of global GDP on a PPP basis, will actually be the one which will do somewhat better going forward. And that's what keeps the overall EM aggregate stable for us. I think India is in a different cycle in some ways compared to China. So structural story is intact, and it had a deep cyclical problem because of the adjustments that had to be made during the period post-taper tantrum. And after that, we had demonetization, GST, and just very recently we had the NBFC problem. But the underlying fundamentals in terms of the policy mix, i.e. what is the real rate levels and what is the direction of broader fiscal policy, has been quite supportive. Most important issue that the foreign investors will be focused on is the monetary policy framework management. If there is any alteration to that, I think that could raise concerns. I think the issue of regulatory front on the banking system, that is less of a focus for the investors, but what they really care is monetary policy framework. There has been concerns on global growth, not as much the US growth itself, and that has made the Fed a little bit more careful in changing its tone and not talk about a shift in the policy stance. In the backdrop, the global growth data point had continued to weaken. And so to the extent to which the talk from the Fed was hawkish right until first week of October, while global growth data was showing some concern, that's what has created this tension between markets and the policymakers.
All right, markets on